Hey everyone, very good morning. This is first day of the March, 2nd March 2026. First session is going to be conducted for our benchmark indexes. Generally, as we have discussed already, the March is bullish for net on net, the bullish for the Indian markets. While we are going through or facing the uncertainties which has been started in the matter of US trade actions or tariff-oriented things. Now it is getting joined with the geopolitical escalated tensions between Israel, US, and Iran. With this Western Asian, that means West Asia's geological tensions are getting escalated. Of course, for the near term, there will not be any peace, whether it is for the economy or it is for the markets, including the global commodities. By considering all these immediate and current ongoing factors which are all having forces to influence the market trends, we from our side, in an advanced manner, with a high care about our esteemed traders and investors, we wanted to share the thing that whether it is for a trading or investment, do not get panic about the market's activity in terms of price movements, and also suggesting additionally that no hastings should be there. Without a hasting, without a panic, one can approach the market with a good strategies. That is only going to help you all to tackle the difficulties and overcoming the same. The strategies, how you are approaching, what you are approaching and handling. These are all the thing that you will be get harvested the benefits over applying this. So it is very important to think about strategies, not about the surrounded news flows, surrounded circumstances across the globe. Because it is not meant for immediately you have to jump and invest on the shares while the markets are getting corrected, because it is not a correction zone for India. You should actually think about the strategies we have already many times discussed. See, the pivotal point for the Nifty 24,700 we have already stated many times. Only by the way of getting close below a 24,700 as a pivotal point, the very first number one behavior shift zone. This is what we called or termed as many times since 2024 year. Till now it is actually acting with a phenomenal impact it is actually providing until it is having our markets are trading above this 24,700. From the positional and long-term perspective, the market still in the favor of bull. For the near to short term, that means starting from the day to 30 days, if you want to take the trend for the Nifty or a Sensex, it is of course in an anxiety mood, and the clarity will not be there for a while, and anyhow the volatility will be driving the markets on either side, with individual stock and sectors lead also. So that is what the clarity one should have before entering into the trading, not even for today, in every time. Along with the information what we are now and then providing based on the behavioral changes that should be adopted where and as it is required. So this is what the thing one should understand and make a clarity and increase the confidence, and then approach the market with ease. Then the success always yours. For the day, the opening trend based on the ongoing tussles or a war kind of actions between the geological areas of Israel, US, and Iran, and as a whole Western Asia, Middle East to Western Asia. The things and all clearly monitoring, because based on the GIFT Nifty's indication, see, the thing was a very high cost years when compared to the previous close and all in the earlier trend. After that, by understanding what really the things and all going between the economies, it is now taking the chance for giving a slight negative open, unless otherwise the further actions on the both side of countryside, that means from the US or Israel and Iran. So until the next bigger steps and all happening, the market digested the negativity as per the current trend and behavior. And technical perspective also, we have to see the Nifty should get a close below 24,700 to see the major and next new leg of rally on the downside. Until then, the volatile based trend can be expected between 24,900 and 25,150 to be exactly. For the day, this is what the important zone one should watch out. Between this level, if the Nifty is trading, you can maximum try to participate with a sell on rise strategy. That is very important. After that, once it breaks and closes or sustained below the 24,900, there only the caution should be highly increased, and avoiding long positions, in particular thinking of short or short buildups, can be initiated with the target of 24,700. Between 24,900 to 700 means almost 200 point, a 0.7% of downward rally one can utilize. For that, confirmation is required by the way of sustaining below 24,900, at least in a hourly time frame. This is also a good strategy to follow until it is trading between 24,900 to 25,150. With a sell on rise approach, one can trade on the markets, but it may not be a suitable one for those who are really a safe trader or a conservative strategy oriented traders. Those kind of traders may avoid participating on the markets, because it is very important to know that when not to trade than when to trade. That is very, very crucial strategy, more than all strategies you are following. So that is one can follow and take the decisions accordingly based on the levels you can follow. From the positional aspect, since the market is struggling to move higher towards the 25,740, that has been many times attempted, but it could not close about to that point. And more than that, the second or interim behavior shift zone of 25,449 also got shattered on Friday's session and closes below to that point. So along with this 25,740 and 25,449 confirmation already market has, it could not actually move immediately or bounce immediately to the positive zone until a decisive close above 25,449 followed with the 25,740. Every rises can be seen as an opportunity for initiating selling or accumulating or building the selling further. That's very simple. From the sector front, the major heavyweight sector, particularly the sensitive, that means the oil, energy sensitive sector will be leading the markets movement today, and it will totally dominate the market for the upcoming sessions as well. Starting with the energy, oil and gas, all major stocks, particularly the OMCs, oil marketing companies, will feel the selling heat. Anyhow, the near term, circumstances is not going to be settled immediately. So the sell on rise can be clearly adopted on OMCs, oil marketing companies like Bharat Petroleum, IOC, Hindustan Petroleum. Oil India, ONGC, Reliance. The price actions can be expected on the favorable side because of the spike amidst the tensions going on the Israel, US, and Iran side. Because of this, the supply disruption probably will be happen. And if it is so, the crude oil price will be anyhow in a rapid manner will get increased. If it is so, for those who have already got refined the oil and in the process of completing or making the finished products of the crude oil for the action of selling or transactions, those kind of companies who are having the higher stock of crude oil will be getting the chance for selling at a higher prices, which means what? After refining process, it should be there. Then only it will be benefit the companies like Reliance, ONGC and all. If the refining stock before starting the process of refining, if the stocks are very high means that will be a headache and a burden for those who are having offshoring the crude oil, because the refining cost will be get spiked due to this current conditions. That will directly impact the cost of production to cost of selling of the company's balance sheet. So it may be the temporary one, but anyhow the dent will be there in the revenue side. Because of this particular reason, who are having higher stock of non-refined crude oil, which is yet to be processed, that particular portion of or quantum of the crude oil will get a difficulty of higher GRM, gross refinery margin, so that the revenue may be get dented. So these are all the strategies amongst the companies who are following crude oil businesses. Apart from that, oil also we can, that means Oil India, among the Reliance, ONGC, Oil India also can be watched out. After this energy sector, oil and gas, the banking and finance can be focused higher, because in all the way, since it is the heavy weighted one and the most dependable one for all kind of industries, these sector oriented stocks will be in a spotlight that will be leading as much as volatility if the Nifty is feeling because of these particular stocks only. So that can be focused in a higher manner. Metal. Amongst the global commodities, not only the crude oil, the metal, including the infrastructure and construction equipment oriented metals, will be get a hit about the market price, starting from the steel till the aluminum. And automobile, based on the sales data for the month of ended month of February provided by the companies, announced by the companies, all major automobile producers, starting from the commercial to till the two-wheelers, actually announced a good number of sales data. So that is anyhow going to help in a bit manner about getting a positive movement on the stocks. That will be the defending point. That means automobiles movement will be defending the Nifty's fall if any happens on immediate basis. Somewhat it may postpone the downward movement. So the automobile will be in the spotlight with a positive outlook. Anyhow, the high should be utilized for them in all the way. The Friday's high and low, a very important thing, even for Nifty, Sensex, Bank Nifty, and mid-cap financial services, and even for every individual stocks under core sectors, the Friday's high and low should be marked, and you can take a trade based on the which side the market or stock getting broken. So that is one important signal before taking the trading or investing actions one can follow. In that manner, this automobile, even though it is getting increased in the prices, you can see the Friday's high as the major target for the day, the final target also you can term it as. While it is trying to approach through the way of nearing or even a break, that is not enough. A close above the Friday's high is required. So don't think the break will lead the auto stocks to move further high. Like it is better to approach a sell on rise as a whole on all sectors, all sector oriented stocks, because you can get a better result as well as the good R&R, that means risk and reward ratio. So that would be better to approach in that way. IT, which may be through the way of short covering, it may try to attract buying, but we are strongly pitching any positive moment like it is showing that will not be a truthful one. The fake buying may happen, the short covering buying may happen, but could not sustain. Even a 1% of IT's bounce already proved like 5%. The week ended 2 weeks ago, 5% downside happened. See the ratio, 1% of bounce got experience with the 5% of downside, including that 1% bounce. In the previous week, every rise in the daily candle, if you want to take 2% of downside from the high, it has recorded on the chart with a lower top manner. We are strongly suggesting you all to reduce the positions in the IT stock, irrespective of the segment, whether it is large cap or mid cap or micro cap, by utilizing any bouncers if the index providing. And be lighter in the IT stocks, because our outlook on the IT stocks going forward is having some increased way of negativity. It will directly impact the fundamentals of the company side. Slowly it will happen, will not be expected in a panic manner. So it may not be giving a growth on immediate basis. So it is better to follow the strategy we are providing for IT companies. Then the pharmaceuticals, as already the sector is attempting to move higher amongst the current ongoing conditions about the geopolitical manner. The pharma will be trying to defend the market fall anyhow. The large cap pharma can be approached for the near to short term period of trading and investment. And mid and small cap may be approached in a small quantities or a small large manner, because it may not be having a strength to sustain. So that is for the next thing. And on the stocks front, we can follow otherwise you can approach the stocks like all auto stocks, OMCs, oil marketing companies, Bharti Airtel, based on the news, the business collaboration with Google, Reliance Industries based on oil movement, ONGC also for the same, Oil India including the same scenario, Gail India till we can take the same current geopolitical actions are going on. Bharat Electronics based on interim dividend announcement about to 1.7, and Arabindo Pharma based on the US FDA search. So all these stocks can be focused higher with a priority amongst many available today. Keeping stop loss, very, very important action for every trader. Without compromise, it is better to keep the stop loss. Safe traders can stay away from the markets. No need of any urge, hasting to approach the market currently. Let it settle and you can come back with the confidence and clarity. Wishing everyone to have an opportunistic trading day. Thank you for participating in today's session. There is a query about the silver. The silver and the gold, of course, are having a chance of growing in terms of price. The growth will be there for the near term, considering the current anxiety and tensions escalated because of the geopolitical issues between Israel, US, and Iran. So you can keep focusing on building long only on the gold and silver, even though it is giving a volatility and giving or a break below the lows and all. It is better to focus only on long. Thank you. We'll meet again tomorrow. Sorry, it is tomorrow. It will be the holiday for the markets, and of course, Wednesday we'll be meeting for the pre-market outlook discussion. Until then, we wish everyone to have a successful and opportunistic day. Bye bye.